Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
All right, today we're going to talk a little supply and demand numbers. We're going to get into some retail prices and talk consumer sentiment as well. But to kick things off, let's recap what happened this week in the markets.
This week on the cattle side, live fed cattle were $1.50 higher this week. Those feeder cattle markets were generally $1 to $2 lower on the week. On the future side, the December live cattle futures contract was up 35 cents, and the November feeder cattle contract was up 75 cents. We also gained this week in the choice box beef price. It was up about $1.40. On the hog side, barrels and gilts down about 50 cents this week. The December lean hog futures contract closed down nearly $3.80. And we lost $2 on the pork cutout value this week, due primarily to what were lower belly prices.
Let's talk a little bit about slaughter numbers. How are those shaping up and how did those shape up this week?
So USDA tells us for the week ending October 14th, a run of 617,000 head of cattle this week. That's down 11,000 from what we did a week ago, and down 45,000 from what we did last year. On the hog side, a run of 2.609 million head this week. That's 47,000 head more than we did last week and 54,000 head more than we did a year ago.
As we take a look at those numbers year over year, how are they stacking up?
So we see cattle slaughter down 4.5%, while hog slaughter is up 1.4% year to date.
When we talked last week, the big report this week that we were looking ahead to is supply and demand numbers. Scott, as we take a look at what USDA did this week, obviously we're talking about input prices and thinking about those as well. Let's run over some of those adjustments.
So first of all, if we look at the feed side of the equation, USDA did very little changes to the 23-24 corn or soybean meal price. We saw them increase the corn price by a nickel, but that's really the biggest change we've seen. When we look at the livestock side of the equation, a few things stick out to me. So not a lot of change in 2023. They did increase pork production 130 million pounds. Chicken, they dropped about 200 million pounds. But when you look at the price side, turkey prices were really the big change, down $4.60 for 2023 relative to what they were saying last month. But for 2024, we are seeing some changes from USDA this month. Pork production is probably the big one, up 560 million pounds more pork in the October report relative to September. I think that's due in large part to what we saw out of the hogs and pigs report last month. Chicken production down about 200 million pounds. When you look at the price side, they lowered the fed steer price by $1, lowered barrel and gilt prices by $4, which would put them back almost to where we're going to end up in 2023, which we all know is not that great from a profitability standpoint, and lowered turkey prices by $9. So lower prices, especially on the pork side, as supplies were growing this month.
Scott, I want to talk a little bit too. You mentioned lower turkey prices, which is obviously nice to see, especially us heading into Thanksgiving and holiday season. We're starting to see some cases of high path avian influenza show up again. You're nodding because you know this is coming. As we take a look at these cases, how does that potentially impact where prices go?
Can I tell you after we get through this winter season how? This is such a difficult issue in terms of just knowing exactly the spread, but the fact we are seeing some cases in commercial herds, commercial flocks already, I think makes me a little anxious. It doesn't take much of a change in supplies to get us those prices to move higher. It's not the first time we've seen this. Of course, eggs seems to be the one that jumps out the quickest status in terms of the very high egg prices we had not that long ago. But we're going to have to watch. So what might look to be a fairly negative outlook for poultry sectors generally could turn out to be more positive from a price standpoint if we see the cases of high path AI continue to grow.
And maybe not necessarily a positive on the consumer side of things.
That's right. Depends on who you are, whether you like this or not. And I will say those that end up with high path AI, that's not fun for them either. So it's not a win by all producers. It's just those producers who can happily not end up with high path AI might see some higher prices than otherwise would be the case. Consumers, on the other hand, could see higher retail prices.
Let's take a look at retail prices also out this month, as we take a look at both the beef and the pork side of things.
Yeah, so the choice retail beef price for September, $8.18. That's up 7.6% relative to where we were a year ago. On the pork side, $4.98 per pound on the pork retail price. That's really unchanged, down slightly from where we were a year ago. And that's due when you look at some of the components on that pork retail price. Pork chops up 1.6% relative to a year ago, while your favorite bacon was down 4.1%.
It might be down 4.1%, but I don't think that means it's a lot cheaper at the grocery store right now.
That just means you're consuming more, right? So you're paying the same amount, you're getting more pounds this way.
All right, let's take a look and talk about how this translates when we're looking at these numbers into prices then at the farm level.
Yeah, so I think this is interesting in terms of, all right, so we always expect the bigger percentage changes to occur as we move from retail to farm. And if we looked at September data relative to a year ago, so again, choice beef retail price up 7.6, the choice box beef price is up 21.3%, the fed steer price up 29.5%, and the feeder cattle price up nearly 49%. Just amazing how 7.6 at the retail level, by the time we get to feeder cattle prices, is nearly a 50% increase. At the same time, all right, so the pork retail price, I say basically unchanged. It was down slightly. Yet when you look at the pork cutout value, it's down 4.2%, and the barrel and gilt price down 12%. It's certainly showing how different supply situation when we talk about barrel and gilt slaughter, hog slaughter being up 4.5% and cattle slaughter, barrel and gilt hog slaughter being up 1.4% and cattle slaughter being down 4.5%. You see the differences as we go from retail to farm.
Scott, when we talk about this in general, and I want to focus a little bit on the retail price aspect of it, thinking about what this does for consumers. We're talking about, higher interest rates and all of those things. How does this all play into a larger global or a larger economic picture, and how that potentially stacks up to demand in the long term?
So it's a good question. I sometimes will go at it this way. We've seen probably bigger retail price changes, right? We talk about inflation. We talk about what consumers have been seeing from a meat price perspective. Yet I argue when you get to the farm level, demand for those goods leaving the farm is more inelastic today because we're adding value. We're adding value to the cattle that we slaughter. We're adding more value to the hogs that we slaughter, which to me makes them less responsive. So when we get bigger retail price changes, by the time that amplifies down to what's happening at the farm level, we can get record highs to record lows really quickly. And I think this idea that volatility is with us going forward has something to do with just that different structure that we're seeing from retail to farm.
Transitions us into consumer sentiment as you take a look at that October number. Not necessarily the direction we want to head.
Yes, so it was a tough month with the index of consumer sentiment being down 7.5% relative to where it was in September. Probably not terribly surprising given some of the news that's been out, or the uncertainty that's been out there. Relative to where it was a year ago, it's up only now 5.2% relative to a year ago. But I think inflation, higher fuel prices, higher interest rates, all those things continue to take a toll on that consumer sentiment index.
What does the whole, does the unrest and maybe the unsettledness about what's going on, we still don't have a speaker, that's not getting anywhere. The clock is ticking for us to avoid another government shutdown. Does that also contribute to how folks are feeling in terms of stability in the economy and the ability to function?
Yeah, so I think we have a lot of things that are creating added uncertainty. If you just took one of them, that's one thing. But when you start to add everything together that's happening and all of it's the same direction, leading to more uncertainty, I think that's when you get back a consumer sentiment index that declines sharply, relative to the previous month. If we get through the government shutdown and don't shut down and end up with a budget and we end up with a speaker, we don't see the current conflict creating more issues. Maybe we find inflation slowing. So it's hard to say. I can paint the very positive story. I can paint the very negative story. I think to your and I's risk management discussion all the time, it's applicable here about just how wide apart we are in possible outcomes over the next 6 to 12 months.
And yet we're still well above where we were a year ago.
And maybe that's a little bit of testament to just how well markets seem to work most of the time. We're trying to find that balance between supply and demand. And I'm not saying we get it done perfectly all the time, but given what we're throwing at markets today, perhaps it's quite amazing how dynamic we seem to be.
Scott, as we look ahead to next week, livestock slaughter, cattle on feed, I can guess what we're watching. Specifically though, as we look at those two reports, what are going to be the key things that you're wanting to see?
Yeah, so it's like playing the recorder, right? You could tape record my voice of saying, I'm going to be curious to watch placements, going to be curious to watch probably beef cow slaughter. Still looking for some signs of maybe trying to grow the herd at some point in time. Those will be the big ones. I also think just how many hogs we continue to see coming from a slaughter perspective will be interesting to watch as we look at that livestock slaughter report.
It is really fascinating, the fact that our near-term supplies really are not slowing. And we talked about this with the quarterly hogs and pigs report, right? Like it's so much a bigger challenge to slow that growth because we're so efficient there. How does that play into long-term profitability for the industry, or does that really, in terms of risk management, make producers have to like dial it in that much more?
Yeah, so I think it is important to it's just different today. So I often describe so we all grew up, at least those of us in the economics profession, we all describe the hog cycle, 2 years up, 2 years down. It was almost like clockwork for a period of time. And I go, gone. That is gone. I don't know what a traditional hog cycle looks like anymore, because it is up when there's profitability, and then it's flat at best. And it might get flat only because it all depends on productivity. If we keep having productivity, then we keep sliding up because we can't, it's very hard to get rid of sows and reduce production. So you've got maybe a longer period where you're waiting. I always say waiting for demand to catch up and give us higher prices. I think sometimes when we go through what we're going through right now in the pork industry, folks pause for a second before they decide to expand to profitability measures. So that's the period to heal, if you will, financially. But I kind of wonder if those don't get shorter. So shorter periods of profitability, these longer periods of sideways production growth that really test one's efficiency to maintain the business.
Scott, it's great to see you. We will chat with you next Friday.
Sounds good, Megan.
So have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And for a rundown of what happens every day at the markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner.